Hey folks, Dan Frio here with your market report for July 15th, 2024. Did you see what happened over the weekend? Former President Donald Trump was shot at, tried to be assassinated. We're going to talk about that briefly, how that's causing market reactions in, I'm going to say, an oddly weird, good way. And then we're going to go over some YouTube data that we're seeing today that's I guess I'll put it this way. I'm a little conflicting on the data that they provided us. So without further ado, let's get to the calendar right now that we have. What we see right now in the overall markets, we have the Dow Jones up to over 200 points right here. Dow rises over 270 points to a record after Trump survives assassination attempt. Look at what's going on in the cryptocurrencies. Is also predicting a Trump victory, I think. Bitcoin jumps as market sees increased odds of election victory by Trump, and the Bitcoin is up over $3,000 right now. But what's the economic calendar look like for this week that might be shaping what's going on with real estate, especially with rates and mortgages and so forth, because that's one huge piece of the housing affordability dilemma that we have right now. So the calendar so far looks like this. Monday, we have Federal Chairman Powell speaking. We never know what he's going to say or what the context is going to be skewed as, so we'll take that with a grain of salt as the day progresses. We have on Tuesday core retail sales and retail sales, basically how the consumer is still reacting right now. Wednesday, we have oil inventories, and then on Thursday is basically the only day that we have data that the Federal Reserve will really even care about, and that's the jobs reports or the unemployment numbers. Okay, so what's going on right now in the bond market? We have the MBSs are down 8 ticks. That means mortgage rates might go up just a little bit. I'll come back to this in just a moment. But what I want to show you guys is this. This is some of the data that I completely find at odds. Okay, the dilemma I have on a daily basis is explaining to people what in the heck's going on with real estate. Okay, and giving them the economics behind it, the programs, the data. But then you have to contend with this stuff. Okay, the housing market crash is coming. It's started. Okay, well, they've been telling us since, if you go back to both these channels, they've been telling us since 2021 it started. Well, that's 3 years ago. But now they're saying it's going to drop 80%. Housing is going to drop 80%. I don't even know how to contend against that. And then this one, where are the buyers? Because why? Well, this is 2024 is the worst year in real estate history so far. The worst year. Mike, where were you in 2008? Where were you in 2000? Where were you? Maybe you're new to all this. I just don't know. But the agenda that they have on a lot of this is mortgage rates are going to skyrocket. They still have that agenda. So let's get over to the CME FedWatch tool to see what the projection is for what the Federal Reserve is going to do at the next few meetings. Okay, because we have to understand what's going on with mortgage rates, what's going on with delinquencies and supply. This is the economics data. We only need supply and demand data. So let's get it. Okay, so the first thing we want to look at right through here is where are mortgage rates going and where are interest rates in general going to go. Okay, so this is how we look at this. This is the CME FedWatch tool. What does it tell us? Well, what the Federal Reserve is going to do at the next meeting. Are they going to cut rates? Are they going to actually increase rates? Or are they just going to continue to pause? Well, in 16 days we have the meeting. What's it going to tell us? Well, what's the likelihood the Federal Reserve will change the federal funds target rate? Okay, right now what you have to understand is the federal funds rate is 5.25 to 5.5, and you can see that right through here on the screen. Okay, so that's what you see in this column. So what this is telling us that in July, at the July 31st meeting, they're not going to do anything. They're going to keep the federal funds rate right here. There's a 93% chance of that. Now, here's where everything's starting to come into play. Now, there's an 88% chance in the September meeting that they're going to do what? Well, if the federal funds rate goes from 5.25 to 5.5 all the way down to 5 and 5.25, that means they're going to cut. So the expectations are now almost 90%. This is from the CME. That's not from me. You have to understand who this is from. This is from the Chicago Mercantile Exchange. There's a 90% chance investors are betting right now that there will be a cut in the September meeting. Okay. Other pieces of this puzzle that I want to explain to you is how do we have a crash in a market? Okay, so this is for you guys to understand who's never seen a crash. You're maybe waiting for a crash. You don't understand what happened in history. What causes prices to go down is if you have too much of something. Okay, so one of the things I want to show you is right through here. I'll pull it out so you understand. Okay, so if you just take this report right here, let me get my head out of the way and I'm going to show you what I'm talking about. The report also highlights a decline in bank repossessions, Lenders foreclosed on 18,726 properties in the first 6 months of 2024. Might seem like a ton, and it is. Okay, making 17% decrease from 2023 and a 10% decrease from 2022. So in the last every year since 2022, this number has been going down. However, look at this. The figure is up. It's up 92% from 2021. 92%. And what is this? This is foreclosures. So is this something to really be concerned about? Okay, well, I got to show you this right through here. Fact sheet. Biden administration announces extension of COVID-19 forbearance and foreclosure protection for homeowners. Basically, in a nutshell, what this tells us is the Biden administration, okay, and the Trump administration put this in place as well, came out and said if you have a Fannie Mae or Freddie Mac loan, which represents 70% of all existing loans out there in the market right now, you do not or cannot get foreclosed on in 2020 and most of 2021. Okay, so this is what you have to understand. Extended the foreclosure moratorium through June 30th of 2021. So you basically could not foreclose on anybody in 2020. Okay, so when we go over here and you start seeing how much they're up, well, the reason why they're up is because you couldn't foreclose on anybody in those days. Okay, so please be cognizant of the data that all these people are providing you. Okay, so that's one of the biggest pieces of the puzzle right there. If you go to delinquencies, on where mortgage delinquencies are, look through here. Basically, some of the lowest that we've ever had in history. Let me see if I got a chart there. Activities. U.S. foreclosure starts decrease 3.5% in the first 6 months, and then it goes down through here and tells you that people aren't as bad in as bad a shape as a lot of people think. Especially these guys. Okay, so that's my report for today. Let's go over and based on the information we have today, let's take basically a snap at what's going to go on with mortgage rates. So right through here is what we're seeing with the mortgage bond market right now. So what this is on your screen is a mortgage bond that trades on Wall Street. Here's all you need to know. This is the price of the bond, okay? So if the price of the bond goes down, which we're seeing right now, yields on this bond go up. Well, if the yield on this bond goes up, that means the interest rate. It means the interest rate on your mortgage would go up as well. So we don't like when this number goes down. But if we go back over, and let's look at a 5-day chart. Look at where we were and where we are today. So we were down here 5 days ago. And again, remember, if this number goes up, rates are coming down. So we're seeing it go from here all the way up to there. Yeah, we are giving a little bit back right now, but where are rates right now and where do I think they're going to be? Well, here's rates. These are the top 6 programs people use when they're buying their first house. Now, they're not my rates. Okay, what you need to understand about these rates is Mortgage News Daily surveys lenders all over the country and asks them these 5 questions. They might even ask my bank. I'm not quite sure. But the 5 questions are, if you had somebody looking to buy their first house, it was going to be their primary home, they're living there, and it was going to be a single family home, and 2 other criteria. What are those? Well, let's dig into the guidelines so we can find that out directly from Mortgage News Daily. Right through here. That means you have a 75% loan to value and a 780 credit score. What does that mean? Well, 75% loan to value means they're financing 75% of the house. So that means you're putting up 25%. Do you have to? No, you don't have to. Most first-time home buyers, they're only required to put down 3%. So that's what we're looking at when it comes to first-time home buyers. So how do you figure out what you qualify for? Do you qualify? What can you do? Well, please reach out to me. Who am I? Well, my name is Dan Frio. I'm actually a licensed mortgage advisor, licensed loan officer, I'll say it that way, licensed in all 50 states, yes, all over the country, as well as Puerto Rico. I'm also a mortgage broker and a large mortgage broker. We're set up with almost 50 different lenders. So what does this mean for you? Well, basically it means one application, one credit pool, and I can be able to offer you my bank services as well as like 50 other lenders. There's banks, credit unions, lenders in there. I can use their programs and their rates also to help you out. So why would you call all these banks when you could just call us? One application, one credit pool, and we're going to help you shop all over the place to find the best rate and the best fees in your market. So that's where we are right now, folks. If you want to check out my team, just go to therateupdate.com. The first thing, number one thing to start an application is right there. However, if you're out there and you're looking to buy your first house, I strongly suggest click the grant button. This grant button is going to search out and see, are you eligible for some grant programs? And we have very good grant programs. They don't require paybacks, and most of them are pretty darn easy to qualify for. So check those out before you go on to the next stage, which is apply now. But if you're out there and you're like, Dan, can I just talk to somebody? There's a lot of questions I have before I put in that application. Well, yeah, just go to the bottom of the website, and you're going to find that information right through here. My phone number is 844-775-5626, or you can reach me at dan@therateupdate.com. Thanks so much for watching, guys. God bless. Have a fantastic day. I'll see you at the closing bell to see where mortgage rates end today. Take care. See you then. Bye-bye.